All right, welcome back to the Orange Wheel podcast. I'm Ted Paulus, founder and CEO of Orange Wheel, Bitcoin strategy advisory based here in Denmark. With me again is Brandon Karpeles of Sovereign. Thanks for being on the show, Brandon.
Yeah, absolutely. Thanks for having me. Looking forward to the second segment here.
Awesome. So in the first segment, we discussed a little bit about the clientele you work with, the strategies that they're invoking when it comes to corporate Bitcoin adoption, how it kind of varies against what we're seeing a lot in the headlines with the really big levered Bitcoin equity plays like MicroStrategy and how that might influence the decision making of your clients. In this segment, I kind of like to dive a little bit more into something we kind of almost touched up against, which was thinking about how companies would apply ultimately a Bitcoin standard approach. So you kind of mentioned that how much of their liquid assets should be switched over to Bitcoin is sort of a function of how orange pilled the owner or team are. And the kind of way I see the world is at some point, they reach such a limit that they're now seeing the world in a Bitcoin standard. And what I imagine will sort of happen is that people will stop denominating their KPIs in the fiat, but also start denominating it in Bitcoin. And that has some pretty major implications for valuations, for capital allocation. So I guess where I'm going with this is have any of the clients that you've been working with gotten to that point where now they're starting to think, okay, if it's Bitcoin that I ultimately want to maximize my exposure to and the exposure of my equity holders to, should I be applying Bitcoin as the opportunity of cost of capital or the hurdle rate for which to allocate to any other investments? Are these discussions that you've kind of gotten up with some of your clients too?
So I will say that analysis is actually what leads them to us is that, hey, I've been doing real estate for 30 years. And I'm realizing all of my properties are getting devalued against Bitcoin. Hey, I've been investing capital into new equipment for 30 years, and I'm realizing I'm getting less return on those capital investments than Bitcoin. And so I would say that's almost a precursor for the people that have been reaching out to us directly. Now, there's other companies where we do need to come in and actually educate them, tell them about Bitcoin. And yeah, it's going to take some time, but a huge part of our pitch is showing them, is denominating things in Bitcoin. The famous S&P chart that S&P has actually lost purchasing power since the Great Depression. And then throw Bitcoin on top of that, it's lost a ton of purchasing power. And showing the real estate market, the median price of a house priced in dollars, how much it's gone up now priced in Bitcoin. So we really try to hit people over the head with the concept that your denominator is wrong. And I've gone out to local business things, events, networking events, things like that, where it's people that own their own companies or are just generally interested in connecting with other people in the advisory space or the consulting space. And I bring this concept up to them and I say, because ultimately a few people always come up and like, oh, you're the Bitcoin. Well, they always say crypto and then I have to correct them. No, I'm the Bitcoin guy. And as we get into the conversation, I start bringing up, okay, you guys are talking about gross profit and you guys are talking about year over year returns and blah, blah. I get said, but your unit of account is the dollar. So it's all meaningless. None of it matters. Like if you're not denominating your business in Bitcoin, you don't know if your doors should be open or not. And it's been beaten to death. Bitcoin is the hurdle rate, but it's true that if your company is not producing more than Bitcoin's annual growth rate, you should shut the doors, liquidate everything, and put it all into Bitcoin tomorrow. And until you think of your business that way, until you do that sober assessment, you don't even actually know if you're running a business that should exist. And I have found that really hits people hard, that it takes them aback a little, but they're like, that's right. That actually is correct. That if there is something that is having a greater return year over year than my business, I should be investing. And it might be Microsoft stock. Maybe Microsoft stock is returning more than your business. Well, if that's true, then you should be liquidating your business and putting everything in Microsoft stock and holding that instead. And it's almost like no one's ever thought of it that way. That it's like, well, what do you mean? I just show up to a job and I get a paycheck. It's like, well, that paycheck is based on the cash flows of the company, and those cash flows of the company, if those cash flows of the company are not producing more than putting your investment, putting your capital in a different company that could return to you, then you're making a poor financial decision. And there's been sort of this inability to break free of this idea of cash flow. That there must be dollars coming in. It's like, no, the dollars coming in are in theory to increase your purchasing power. So you have more ability to buy stuff. You now have more money. But the problem is, if cash is coming in, but you're not increasing your purchasing power more than holding capital in some other asset, then you're losing. And it's like, no one's actually done this math. They're just like, well, I need the dollars to come in. It's like, well, what if I told you you could just hold a laptop that went up 30% every year, and then you could just borrow or sell your laptop at the end, and that would be worth more than the cash coming in? And it's like, no one's really done this thought experiment. So yeah, you do have to frame it that way. You have to impart that on people, and yeah, eventually, I there's a gentleman named Jordan Guess, who has a company called Bitment. And it's basically accounting software for companies that want to be on a Bitcoin standard. And it's viewing everything through that lens and teaching these companies that that's what they have to do. It's sobering, it's hard, but at the same time, it needs to be done. And generally speaking, if the company hasn't, as I said earlier, a lot of these companies have figured this out already, and that's why they're coming to us. If they're not in that camp, if they're in they need to be educated, sold on Bitcoin, and then have the implementation done. Yeah, you have to sit down, explain this to them, and make sure that they start looking at the real denomination unit for their company.
Yeah, really, really cool. I think, I mean, the nerd inside me, that loves the kind of economic aspect of this is, thrilled to see what happens, because I think and I think I get the sense you as well, Brandon, can relate to this. Been a bit of a heterodox thinker when it comes to orthodox economic theory, and how there's holes that just are now becoming, that we've always kind of identified, but are becoming unignorable. And watching the typical economists have to kind of like dance and shake on stage to see all their correlations kind of diverging now, right? And always coming up with new excuses. So I think it's really fascinating, and I think I don't know fully what it's going to look like on a Bitcoin standard. I think Saifedean has a pretty good perspective. I don't agree with 100% of what he says, but one of the pieces that I think will be just super elegant once we're on that Bitcoin standard is that we will no longer need this like real and nominal distinction, right? I've always thought it's funny that okay, with the real return, we have to do the kind of back calculated from the actual stuff that we're actually getting on our accounting notes, right? And I think just Bitcoin is real, and it becomes funny when you think about it, right? It's like, oh, we've actually been living in something that's kind of like not real for some time because of the artificial setting of the cost of money and so forth. And I think what falls out of that is, as you brought up, I mean, there's a lot of companies out there now that probably are having a negative economic impact on the world, right? It's actually value destroying. And it's a weird thing to say that ultimately, as we move through this transition, there probably will be companies that just have to get culled, will have to stop their operations. But I think Bitcoin provides an opportunity for them to preserve the wealth that they presently do have, and then reallocate in a way that is more meaningful on the other side of the transition. Without that, these companies would just be going bankrupt slowly over time, I suppose, right? So,
well, and that's honestly what should be happening. My former life, the world I came from, I handled distressed assets for a financial institution, and we would deal with liquidations, bankruptcies. We would try to do turnarounds, and I would say, sort of tongue in cheek, but to people in the industry, I would tell them, I said, I genuinely believe 70% of businesses shouldn't exist. That we almost 3/4 of the businesses we deal with, not just me, anyone deals with, shouldn't exist in a hard money standard, in a non-credit based monetary system, in a true economic calculation, in a not forced consumption via debasement economy, that basically 70% of these businesses shouldn't exist. And it was interesting. I would have some very interesting conversations that would come from that. But basically, since 08, 09, the Fed said, we're not going to let these businesses fail. It's just not going to happen. So they claim we can't deal with Bear Stearns not getting $1 million bonuses for their executives next year, or if this one bank collapsed, the whole system collapsed. Whatever these ridiculous tropes are, they've basically decided that we're just going to prop up every business in the country at the expense of people trying to hold our currency. And that's not just in the United States, that's globally. So anyone holding dollars is basically propping up. I believe between 2/3 and 3/4 of the U.S. economy. I don't even want to call it the economy, because they're providing negative real returns, but they're getting nominal positive returns, and they're just a complete drag on capital allocation that absolutely needs to get reset. But yeah, I lived it firsthand. The Federal Reserve, the U.S. government, the world governments, the world central banks, they all decided no businesses are going to fail anymore, except for a few outliers here and there. And we're ending the business cycle. And to end the business cycle, we're just going to socialize all of those losses onto everyone.
Yeah, and I think it's a result of centralized planning, and it's a bit of a shame, because the U.S. used to be the place where it really was true free market, or something approaching that in the world, and it has kind of regressed into something that is a form of some degree of socialism. They said socializing the downsides, but then privatizing in some cases through the financial sector a lot of the gains. So I think it's great to see Bitcoin is sort of forcing an end to that highly unfair system. I think an interesting discussion point is on a big argumentation that people say is, we need the companies because we need people to be employed. And I don't know where you stand on this, but I think most people don't like their jobs. It's kind of like, if people could be freed from their jobs, then they would just be happy about it. So I always find this debate kind of funny, being like, people need to be employed. They need to be, and it's like, even if the job's mindless and value destroying and people hate it, they need to go do it.
It's such a canard. It's a total false thing. You want us employed so we can pay our taxes, and you guys can debase our earnings by printing money to do whatever insane lunacy you want it. But for 5,000 years, people just had a trade, or their families saved money. People didn't work 9-to-5 jobs. This is the last 120 years, the Prussian school, the reforming of the education system, going off the gold standard, central banking. This is all part and parcel of this, and it's sold to us as, well, we had the Industrial Revolution, so everyone needs to be working long. No, we should be working less. We should be, yes. If we've increased productivity, we should be doing less stuff. And it's all because the money has been destroyed and they want to print money. And so they've tried to convince the entire world that, without jobs. Well, what's funny is they're actually right. Is that under your fiat monetary system, without jobs, yes, everything would collapse. There would be chaos in the streets. But the problem is your fiat monetary system. So you've built this completely sham system that you've forced everyone to operate under. And then you're like, our sham system will collapse if people don't have jobs. It's like, yes, that's true. Or we could not have a sham system. That's the other option. They make it like it's a binary option of people working, good, people not working, bad, society collapses. But it's really monetary system bad, opting out of the monetary system good, and society doesn't collapse regardless. It's this like false binary we're presented with.
Certainly.
That one drives me crazy more than, and once consumption goes down, that's when the economy is going to, we don't need to be buying this useless crap. Like, consumption should happen on a natural basis of people making their own opportunity cost about their life and their desire to consume, not a forced debasement of their currency. So, well, I might as well go spend it on something that's going to be worth more in a week from now. I mean, it like when you see it from that lens, it's all just so ridiculous. And every single excuse of the economists and all the doomsday um, prognostication. I don't want to say prognostication. All the avenues that lead to a doomsday scenario are all problems of the monetary system, not symptoms of society. So
Totally. Yeah. And kind of what's linked up with that. I mean, we go on for like hours, I think, on this. I think it's super fascinating. And again, what kind of excites me the most is the fact that the economists are going to be just proven wrong through actual reality unfolding, which is the
yeah,
really cool thing.
it's
And
like the
they're
fall of
resisting
the
so hard.
Soviet Union. Yeah, it's like, well, yeah, you guys were wrong. Like the system, I don't want to say the U.S. is a free market capitalist system. It hasn't been for a very long time, but it was much closer to free market capitalism than the USSR. And there's a reason the USSR collapsed, and they were too far away from a free market capitalist system, and the US, the Western world, whatever you want to call it, was closer to it. So the same thing will happen with the monetary system.
Yeah, there's so much that you kind of brought up that I just basically wanted to like nodding my head to, and a few points I wanted to kind of elaborate a bit further on. But to be honest, I've kind of lost my exact thinking there. But maybe just to switch gears a little bit. So you brought up your experiences working in restructuring of organizations, and maybe just want to elaborate a bit more on how that. I mean, I think you explained a little bit about how that might have made your eyes a bit more open to Bitcoin, having seen a lot of these distressed companies and realized, okay, this just doesn't make sense that they are persisting, and the reason for the persistence is probably there's something fundamentally wrong with the monetary system itself. But when you kind of work with clients today, do those same skill sets? So what were the skill sets you developed, and can you apply them now to the companies that you support today under a Bitcoin standard?
Yeah, absolutely. I mean, I will say, my job was a fiat corporate job, but I did have I used to before I left, and kind of the last couple of years, I did have a lot of autonomy in my job, and I was working side by side with the business owners to try to figure out a restructuring plan. So I really did get the opportunity to get into the guts of the business. And we didn't just come in and a lot of these consultants come in, they're like, okay, we're going to cut 5% here and 10% here. We were like, no, let's look at operations. Let's look at staffing. Let's look at invoicing. How are you doing this? What's your payable versus your receivable cycle? What's your net pay? What's your net receive? And really try to formulate a plan to right the business. So a lot of that included cash management or timing of expenses, these sorts of things. So I really did get a first-rate education at this in my position about understanding businesses, understanding the guts of businesses, how it all worked, and when things aren't functioning right at a business, how you go about trying to ameliorate those problems. So a lot of times it was just as simple as, hey, your costs are too high, you're not passing it on to the customer, we need to adjust that. Oh, I don't understand, how are my costs too high? And it was as simple as that. But a lot of times it was, hey, there's operational issues here. You have inefficiencies in the way you're streamlining things or staffing this, and those need to be addressed as well. So I kind of got these sort of jack of all trades in the business world. If you went to business school like me and wasted 3 years there, they have sort of the finance and accounting, marketing, operations, management, and that's kind of like the four horsemen of the business world. And I would say IT, computer science, forget what it was called at school, is probably the fifth as well. But I kind of got an education in all of those things and really learned how to be proficient and adept at handling all of those aspects of a business. And it's no different for the businesses we're dealing with now. That there are potential efficiencies to be gained, and changing your unit of account is just the first step to that.
Awesome. Yeah, because what I sort of see as being like combining those two skill sets, like we're trying to do at Orange Wheel, is somewhat similar. Bringing together, the background I have in management consulting with BCG and corporate strategy. What I envision will be the case is once companies do really adopt a full Bitcoin standard, they can relook at their current operating business in a new lens and think about capital allocation and, okay, what can I do with the asset base I have to optimize my Bitcoin per share? And how do I manage those cash flows coming from the business and so forth? So I think that's an exciting opportunity that I don't see too many advisories besides ourselves kind of looking beyond just the treasury state and maybe payments and stuff, but actually looking then at the kind of combining that traditional management consulting with a Bitcoin lens.
Yeah, that's absolutely the final step. We haven't gotten there yet, but our hope is, and that may even be 4 or 5 years down the line. We'll see. But absolutely, we offer those services. We have that expertise. That is the goal, to get to the final step of, okay, now let's do long-term capital planning. Let's help out with the operations. Let's advise on everything else of the business.
Super cool. It's an opportunity to disrupt the MBBs of the world, which I think is pretty cool.
100%.
All right. Thanks again for this segment, Brandon. We'll catch up with you again in the final segment here together next.